welcome to a really special interview that we have with Q's Views Finance YouTube channel. The guy discusses everything in the EV space, and today we're going to be sitting down discussing who the big winners and the big losers could be in the EV space moving forward.
We cover FUV, Tesla, Ford, and Workhorse.
NIO, Apple. It's a big episode, guys. It's a big episode. If you like this content, please like and subscribe and hit the bell to be notified, and continue the conversation with us on our Discord. And consider becoming a Patreon. We have multiple tiers for supporter, fan, and super fan.
Please hit the Discord up because we want to talk with Q. And if you have questions for him, leave them there because he's going to answer them.
My name's Quentin. I got into the stock market like 2.5 years ago, basically the crash everybody was talking about. I was like, okay. Turns out when there's shutdowns, you can just really kind of throw yourself into one thing. So instead of just talking my girlfriend's ear off about stocks all the time, I decided to make a little YouTube channel so then I could talk to a camera instead of ruining my relationships around me.
My wife told me to shut up many times.
Yeah, and my wife has me out in the garage in the back.
This is a cool chart I found. Europe and China were the largest electric vehicle EV markets by a wide margin in 2020. Look at this. China, 1.3 million at the end of 2020, Europe 1.4 million, and US a measly 328,000. So the Western world seems far behind in EVs. What do you guys think of this?
China has this mandatory, basically 40% of all vehicle sales by 2030 have to be electric. So that makes sense that they have been moving forward because you don't want to get caught off guard if you are making gas. You have to be able to transition.
So it's 40% by 2030. And I heard 25% by 2025. But honestly, 2030, they'll probably be done.
I think so,
100%,
yeah.
90%.
Yeah. It makes sense. You don't want to keep selling vehicles that eventually will be outlawed.
That's the other thing about China. They actually charge you money if you want a nice vehicle. You need a special license. And all the incentives are for, obviously, EVs.
The other part of it, though, is although China is leading the way, in America, there's a lot of politics that are getting in the way in the adaptation of EV. A lot of the fossil fuel companies are lobbying. We look like a bunch of fools when we're not even talking about Tesla being the leaders and that GM has electrified the space.
There's an example there with like the whole Workhorse USPS contract deal. So there was basically this $6 billion contract. At least we thought at most it would be about $6 billion. There were a few in the running. There was Mahindra, which is like an Indian company, Workhorse, and then I forget the third one, Oshkosh, who ended up winning right now. They make military vehicles. They've been working with the military for a long time. However, they weren't making just electric vehicles. And that was the big thing, that the US government doesn't seem to be really supporting their own claims, which is let's go electric, everyone. But then they actually ended up going with Oshkosh and giving them that contract, even though they were going to get either hybrids or fully gas vehicles.
Which EV stocks do you hold?
Right now, Tesla. I had some ARCIMOTO and I had some Lordstown Motors, but ever since their last earnings, I'm out of Lordstown Motors until I see lower cash burn. And for ARCIMOTO, I need to see some kind of milestones because they've been talking about halfway through this year is the start of actual full-scale production. So until then,
we're going straight to the microcaps. So
that's where all the money is, Vitaly.
If you watched our channel, we talk a lot about FUV, and I've probably been very bullish in the beginning of the year and turning more bearish towards the end as I saw that they weren't delivering enough vehicles like they promised.
Yeah, I think they were putting out 60 per quarter.
78 was the last quarter.
Well,
hey,
78, and they're not even all sold. Some of them are feeding the rental market, so the revenue has taken a real hit. I don't think this is the bottom. I'm sorry to say that because I do have stock. I wasn't as smart as UQ. I kept my shares, so I'm a bag holder.
I think it's kind of up to whether or not they decide to raise capital. We've known that they have been applying for some loans, so if we get back about that, that probably save them from having to raise some capital. If they do end up raising capital, I don't know how low the share price can go.
Presumably, I'm thinking they'll raise capital after the bump from the 2222 announcement.
It's all good. I just have to see that production getting ramped up. And then that's going to be just like recurring revenue.
Back to Workhorse, went as high as $41. Oh, wow. And now it's sitting at $3.90 and market cap
600
honestly,
million.
It's still too high.
Well, going into that contract, basically, if you can give them like a massive $6 billion contract, you can really start valuing this company pretty highly, at least. However, the problem with Workhorse is they've never reached anywhere near profitability. In fact, their cash burn is insane, especially for how few vehicles they manage to produce. And the vehicles they do produce, they might have recalls, they'll have issues with them. So maybe the product is great. And that's the biggest argument you see here on YouTube. There's a lot of channels talking about Workhorse and how great their vehicles are. Even like users of the platform, they'll say, yeah, love the product. But if they can't scale it up and they can't do so profitably, there's just no scenario in which Workhorse will come out on top.
What's the burn rate? Why are they burning so much money?
I'm not sure. I mean, they are paying off their management team pretty big amount, and it's all in R&D.
I just watched a video yesterday that with all the money Tesla makes and being the leader in AI and everything, their annual budget on R&D is 4%. That's insane.
Yeah. Tesla's ruined all other EV stocks for me. Their efficiency, it's unrivaled. It truly is. Even with the legacy automakers that have been doing it for a century.
There you go. This is kind of pathetic. I think they're making less than ARCIMOTO and they're worth double the price.
Yeah.
Honestly, in terms of revenue, I'm not talking about everything else, but look at this, 1.8 million estimated in revenue to be valued at $600 million, and you're making less than 2 million. I wouldn't even risk buying at $3.90 right now.
Even as of their Q3 earnings, they were saying that they have additional testing of their current truck design underway with plans to future reconfiguration in process. So I'm not sure what they're still testing after years of testing, but even the CEO, I believe, stepped onto the earnings call and ended up saying, we're not even sure if we're ever going to mass produce our van, which was a massive and bold statement considering the whole company was based around that van.
That's crazy. And I know they had tech with some drone stuff as well, which I always thought was like pie in the sky.
Yeah, that's what they
Price
called
of
it.
sales. Look at this.
Jesus Christ.
I mean, well, what's crazy is like if you're going to invest in one of these small market cap companies, I don't want to keep talking about FUV, but if you're really just willing to take a flyer, 3.8 million, under or around 300 million.
Yep.
So already making double what Workhorse is. Let's go to the price to sales for a second. So the other one's 265, and this one's look, this is overvalued too. I'm not saying that, but I'm just saying if you're going to take a flyer, you're taking a flyer in the wrong company, my opinion, not financial advice.
I think that's the potential for ARCIMOTO is that if they do manage to scale up, I feel like they probably will be able to eventually. Their platform seems pretty straightforward. And like if they're able to build upon that same platform, do different iterations, I'm sure they'll be able to figure it out, especially with the help of Sandy Monroe. That partnership got me pretty excited because mass manufacturing is his thing. So the moment they begin to really scale up and actually scale up that second factory, especially, that's going to be really the big kicker for ARCIMOTO. And when it could come from overvalued to drastically undervalued.
Let's say they get the ATVM loan. They're starting to scale this year.
Yep.
Are you willing to go buy their shares? And at what price would you do it?
It depends on the production goals, targets.
We've talked to him sort of, and I don't know if you've seen those, but it's probably, and I think even Lee from LG Investments is around 15, 20,000 next year.
That seems like a massive number. I mean, I'd be willing, obviously, to buy the price much higher than now if we manage to hit that target. 10,000 times the 15,000 unit price. Hopefully that goes down by like what, a current 25% from our current price, around 20. Oh, that'd give us 150 million, which for our current price, that'd give us like price of sales of just 2 for a company. And if they manage to hit that, then they'd be able to likely repeat it. And then the price to sales being a 2, even if it were like a 10 valuation wise, it'd likely drop a whole lot more. So I'd be willing to buy it a whole lot higher. I mean, probably anywhere between here and the all-time highs. I wouldn't mind if they actually managed to put out those numbers.
So you're willing to wait, basically, you're saying till the end of 2023 to see how many actual vehicles they sell, because that's the only way you'll know is to wait, not to buy it right now and take a gamble.
I had some shares and I've been in and out of the name, but it was just trading in this sideways channel and I wasn't seeing what I wanted from each earnings call. So I just decided to kind of step out.
What was the main thing that got you out? I'm curious.
The production volume, or like 60 and now 70. As great as that is, if you take a look at the Facebook groups for ARCIMOTO, they have a super good like fan base and following. Everybody that has their products do love the products, but they always talk about problems with the ARCIMOTOs. So if at such a small scale, they still have massive problems and they actually have people physically going into like upload software to the ARCIMOTOs, you can't do that at a mass scale. So until I see that being resolved, I have a hard time actually seeing them being able to get to mass scale.
All right, so that's interesting. I don't follow the Facebook groups. So you're saying the actual users who have gotten their ARCIMOTOs, their vehicles have what issues? Or what are the problems and why they still don't have over-the-air updates too? Like nobody has this apparently. Tesla's like Tesla and NIO are like the only 2 companies I think that can do this, by the way. And XPeng, right? Am I wrong in this? So no, it's weird. Why is this so hard for these people to do this?
Oh, here, I'll just pull it up. 1, ARCIMOTO engineers can't spell severely, and that's because up here it says severely. And number 2, of all electric motorcycles in the market today, the FUV has the worst thermal management features. And this is just an example. I'm not trying to like take a dig at ARCIMOTO at all, but I think it just shows that the product quality is not quite there yet.
I've never seen that error. I made a point of driving around in 100-degree weather. We also charged in 100-degree weather.
Art says, I've not seen that error. Were you perhaps either driving very slow and the motors couldn't cool themselves or driving very fast and hard? Like all new products, though, I don't know if I'm going to fault them for this part of it, because I agree they're going to have issues, but that's why they're only selling so few out there to see what those issues are. So I don't know if this is a big problem. I think this becomes a big problem in 2023 if they scaled, and then that's happening, right?
Yeah. I don't mean as this necessarily being one of the bigger problems. I just think the fact that there are a lot of recurring and different problems that seem to be like a wide range of different problems that different customers face. I think it's going to be a hard time for them to really have all these recalls, because ARCIMOTO have been having many recalls. even on the few vehicles that they do put out.
So what happens? You mentioned that they actually go down to someone like this individual and send somebody there and fix it?
Yeah, they'll send actual mechanics to go and basically check out the ARCIMOTO, try to fix some of the problems, or even upload the software manually, which works right now because they're at such a small scale, like mostly in Eugene, Oregon even.
I don't think they're going to produce 15,000 vehicles. And if they do produce 15,000 vehicles, I don't think they're selling 15,000 vehicles. They've had 4,000 pre-orders forever. And I don't see Mark actively trying to boost sales. I see Mark trying to seed the rideshare business and the rental business. So if they do sell 15,000 of these, on one hand, I don't think they're going to make 150 million on it, but they could make more if those vehicles are rented. They could make virtually the profit's limitless. It's just how many hours a day that thing can get on the road. So 2023 is going to be a really important year to see which model is it.
This is totally conjecture at this point, but I think that Mark doesn't yet want to scale because I think they could put a lot more vehicles out than 60. It's not that high of a production rate, and they've had a high amount of pre-orders for a long time. So seeing to me that they're not trying to fulfill those orders and really claim that revenue as quickly as they can, to me, it shows that perhaps the CEO like himself doesn't have the highest confidence in his own product currently. And maybe I'm wrong. Hopefully I'm wrong.
To defend him, he did say on one of our podcasts, they got for the first time, they had a vehicle come off the line that was perfect. So he said, we're starting to see vehicles come off the line perfect, like literally 100% QC ready to go to customers. So that's good to know.
We're going to discuss Ford and their debt load.
I would like to explain to you my short thesis behind Ford stock. This company, I believe that very soon they will raise capital in a very substantial way, meaning that shareholders will lose value for each share. Typically, the stock sells off, ensuing some kind of share dilution like this, and I believe that this will happen very soon for the reasons I'll explain very briefly. Now, this video is going to be a lot shorter, so if you guys like it, please subscribe to the channel. It's very much more for your benefit, saving you time, and not really good for the YouTube algorithm or my channel. So if you like it, reward me by subscribing. The stock is up 144% this year, running into multi-decade resistance and highs we haven't seen since the early 2000s, hitting a market cap of $100 billion just yesterday, currently sitting at $99 billion. Now, what does this mean? Well, it means that Ford is in a great position from a stock perspective, hitting valuation they haven't seen in 2 decades to start raising capital. And why may they want to raise capital? Well, for this reason right here, that their debt, this red line right here, according to the NASDAQ website, as of April 16th, was $161 billion on a steady uptrend, that red line. Then below it is the equity, and then below that, the cash and cash equivalents. Now, the cash and cash equivalents are at $30 billion versus the debt at $161 billion, which again, just to call back to the market capitalization, the total valuation of Ford being just under $100 billion. So debt is not only more than cash, but it's also a lot more than the total valuation of the company, meaning that every capital raise to try to pay off some debt is likely going to be quite substantial, and this is a great time for them to actually try to pivot into the EV industry, and they need cash to do so.
We weren't paying attention because we always thought Ford was junk, but honestly, if anyone was paying attention to Ford, as soon as they broke certain resistances, probably should have gone in and had a nice trade. And in fact, even now, I'm not saying I'm going in. I think we've missed the bulk of this, but it looks like the other resistance, which was from back in the day. Let me.
Can we just talk about what that RSI right now? I mean, that RSI is like it's coming up into the volume of the stock. It's like, are you kidding me?
As long as this holds this bullish momentum, there's nothing to say that Ford in the interim can't go up to $35 or so. I don't know if you agree.
I'm totally open to being wrong with this trade. I'll mostly do it based on like certain level breaks. Like if we see it holding above $25 for a while, making a bull flag, totally willing to admit that I was wrong. I'm not trying to say that Ford will fall down at all. I just think there's potentially a very good risk to reward. If it does come back from 25 to 20, for example, I mean, there's 20%.
If it doesn't hold $20, then you've got a problem.
Yeah.
So back to your thesis, here's the article. I think it's the same article. Here's why Ford has a meaningful debt burden. And you brought up this graph. What is the real issue? Why is this a problem long-term for Ford or even short-term for Ford?
Interest racking up, basically. They have even like the ATVM loan. They haven't fully paid that off. From what? In 2009.
How much did they take? Do you know how much they took in terms of borrowing or no?
And what was the interest on that?
So $6 billion government loan in 2009. And as of this article from July 29th of 2020, they still hadn't paid it off. They've been making payments, but for a bit of reference, for example, Tesla, I believe, took out about 400 million in 2010, and they paid it off in 2 years.
Yeah.
Which 400 million, obviously a much smaller amount than 6 billion, but Tesla in 2010 was also very small of a company. And I don't mean to say that the fact that they haven't paid off the ATVM loan is the problem. I'm just saying that the way that they deal with their debt, pushing it aside and not trying to pay it down to be as lean of a company as possible and kind of get rid of interest. I think LG actually commented on my video saying that they have to pay nearly 2 billion in interest annually.
That's crazy, because you just showed a $6 billion loan, but if we looked at total liabilities is $216 billion. And you only showed a little piece of that ATVM loan at 6 billion. Cash on hand is 31 billion. So look, they have some money, but still it's not enough to pay off their debt. The other problem, to your point, this is what's scary actually. We have 216 billion owed divided by 3 billion in income that they have left over. Like if they wanted to pay it off at some point, that's 72 years. Is that right? Am I wrong in this?
That's if they took all of their profit, all of their money. That means,
and I think that's not even calculating interest, would it?
In the net income though, the interest is paid off of, so the net income has to be minus the net interest, I would assume.
Okay. Yeah.
We can double check this, but either way, it still sounds bad. The other question was, obviously they're switching to Mach-E's now, and they're selling EVs, that they're going to switch to F-150 Lightnings. They're doing Mach-E's. How many did they sell? Do you have any stats on that?
I'm trying to pull that up right now.
Here's the problem that I see. Even if they match Tesla 1-to-1 on sales, right, their profit margins on these EVs are way, way lower. And what's been supporting the company historically is the sale of ICE vehicles. Every EV that they sell is one less ICE vehicle that they're going to sell. So they're making less money on the EV, and they're also not replacing the income that they were making on the ICE vehicle. So they need money to ramp up the EV division, while at the same time, the cash cow is being eroded underneath them. And they themselves have to do this. So at some point, I think bankruptcy.
Someone said Ford should spin off their EV division. Now a Ford EV survives.
So they do that. They spin it off. They have a profitable EV company with no debt, and then bankrupt the
no debt. Legacy Ford 10 years from now would be probably bankrupt, or sell off their division to GM or whoever else is left standing. I mean, they have to pivot. That's the point, that eventually it's either bankruptcy, like you're saying, or they split up the companies, just like a lot of people. Even GE right now has split up into 8 different companies. Yeah. Multiple divisions are failing. They're like, let's let them loose.
Let them loose, right.
Let's see which one wins.
I don't really see the path forward, especially because, like you said, it comes down to the product. There's a lot of things that product can't even compete with what Tesla was doing in 2012. So how do you scale your business up when you need to spend more money? You're in a tremendous amount of debt, and what you're using to pay the bills is being eroded by what you're now selling. I just don't see it.
How many cars did they actually sell? Sure. Are they selling EVs? That's really the bottom line. If they're not selling any, then I get you.
Then there's
but
nothing.
If they're selling something.
They're selling, but we need to know what the profit margin is on that, because we know that the Teslas are like 30%. So they could lower the price of the Model Y 30% and still be making money and undercut Ford. So
this is their Q3 earnings from 2021. This is kind of one of the points that I was trying to make in the video. It's that they have to invest so much into this battery electric vehicle, essentially movement, and saying that right here, they were talking about their capital expenditures from 2020 to 2025, what they're projecting from the CFO, saying they have to invest about 40 to 45 billion in strategic capital expenditures. Then 1/2 or more of that is going to be 30 billion just to devote exclusively to BEVs or battery electric vehicles. The fact that they have to invest so much into it and try to ramp up this production, all the while having the hindrance of their legacy auto business, I think that's really where the debt and the interest is going to hurt them so much. Because if they just had purely cash, totally think they could do it. You know, we just saw them on their balance sheet. They have about 31 billion in cash and equivalents. But if they have to invest this much and they have the interest racking up in their net income, which if we scroll all the way to the top, they say for the quarter is about 1.8 billion. I simply don't see how they can pay off debt, keep up with their interest, and invest in a way that's important enough that they could either catch up or even maintain their current position in regards to Tesla.
I agree. Do they mention at all how many actual EVs they sold in this quarterly?
Probably, but I can't find it.
In the meantime, I want to show you this. This is another disadvantage that Ford has that Tesla does not. Ford threatens dealers. I'm sure you guys heard the news that a lot of the Ford dealers were asking current F-150 reservation holders for more money to get their vehicles. It became such a problem, and it made such a splash on Twitter. Andrew Frick, the Ford vice president of US and Canada, he wrote a letter to dealers saying, "It has come to our attention that a limited number of dealerships are interacting with customers in a manner that is negatively impacting customer satisfaction and damaging to the Ford company brand and dealer body reputation. If it is determined your dealership is engaging in such practices, Ford company reserves the right to redirect that dealership's allocation of the F-150 Lightning for all model year of 2022. So at the same time, they are also fighting with their legacy dealer network, which does not want the change to EVs, let's be honest, because they make most of their money on servicing ICE vehicles, and there's really nothing to service.
For Q3 of 2021, 2021, they sold about 5,880.
Year to date is only 20,000. I thought it was a larger number.
Yeah, this was for Q3. So this was posted January 3rd.
Okay. I actually thought they sold way more Mach-E's. So if they've only sold 20,000 Mach-E's, that's not a lot though. Considering that Tesla's selling just, let's say Model Y, 500,000.
That's impressive. I'm actually
so 100,000 is okay.
I'm just looking for their profit margins and I can't find them anywhere. Like, what's the margin on that?
Here's Tesla at 163 forward PE. You're looking at Ford as a value investor and you're like, well, this is 13. It seems like, oh, there's some lemon to squeeze here and there's no lemon to squeeze in the Tesla play, right?
Yeah.
But look at their revenue growth. If you just wanted to see if they're growing, they are losing, not winning.
Yeah, they do have declining sales.
Yeah.
Yeah. So it's not a massive decline yet, but declining sales in an environment where like a company like Tesla, we keep talking about, even NIO and Xpeng we'll discuss, their sales are going up and up and up.
80% growth year over year in Tesla.
I'm not saying they have to grow 80%. This is a mature company, but not to grow 5%. I mean, like, something, you got to grow something.
Not trying to sound like a Ford bull, but they were also more susceptible to supply chain issues and chip shortages than Tesla 100%. Because Tesla made their own. So Tesla is more of a tech company, and so they're going to be more nimble. So in that sense, as long as it's all of the legacy automakers and not just Ford, I don't personally hold that against them.
Cathie Wood, she says these guys are going to have massive inventories going into like next year, that they're going to have all of these cars, all the chips are going to be fine. They're going to have all these cars on their books and they're not going to be sold. That is her thesis, that this is why a company like Tesla is going to win. ICE is claiming chip shortages. What happens at the end of the year when there are no more chip shortages? What's the problem now? Right now, when you go, I want a dream car, I'm looking at this thing. What are you looking at?
Oh, it's a Tesla all the way. Yeah. Okay. No shame. I'll admit it. I want to see the 4680 cells. And if I can get that like in my car, cheap kilowatt hours.
But we're a little bit older. We're going to die sooner. So we need our cars now.
How old are you actually? Yeah. How old are you?
I'm 22. Yeah.
Oh my God.
You're young, man.
Dude, you are crushing. Man, that is crazy.
You're doing the right thing, investing and doing all these things.
You got to pop on our Discord.
Our Discord, by the way, I made a special channel for EVs right now. When Quentin joins, hopefully, and he'll answer some people's questions. So if anybody posts anything, the link to you somehow, you get a notification, just answer them if they have questions for you personally. And for everybody else, if you haven't seen the Discord, we're discussing FUV, of course, in the channel. And hopefully Quentin can join us on a bunch of these discussions. Back to Ford.
I think the biggest problem with Ford from an investing standpoint is that it's such a well-known name that it seems so safe, and you even look at PE or price to sales, and it seems like almost a good buy, if they do manage to keep scaling up their EV business and transition, that looming debt and interest and the fact that they are held back by so many legacy, their factories, they've been shutting down left and right. They'll have to get rid of the dealership system at some point. People don't want dealerships. They don't really like going
How do you even, I don't even know the legal way to get rid of something like that. Don't they have long-term contracts with all of these guys? So I don't know if they can do that.
They'll have to phase them out. They'll have to phase them out and not redo them.
But what I'm saying, I don't know if that process is even, I don't know. That's what I don't know if it's possible to do that. And all these states, by the way, have dealership laws. Like Tesla's working its way in the system to get to certain states. They can't even sell in Texas, by the way. So you can't they can't open a dealership basically, right? In Texas. So this is a very interesting next decade for legacy auto as everybody goes online and buys their cars from RIVN and Tesla and NIO and whoever else, Well,
both Vitaly and I went through that process with Tesla. I ordered it on my phone. I emailed a couple of documents, took a photo of my ID and like moved my face around. And then some point in December, I look in my camera and a guy drives up a Model Y, gets out and walks away. I go over to it with my app. He just walked away. I go over to it with my app, put in a couple of buttons and the door opened. That is the easiest experience that I've ever had buying a car. And it's also the most money I've ever spent sight unseen. I'd never driven a Model Y before. I'd driven a Model 3 before that, but I'd say that I am indicative of like the average person, right? That just has never done that. Yeah. And the product name is so strong that you go ahead and you buy it.
You're like, oh, 60,000. Sure. I'll buy it on an app.
Yeah, right. I want to get your guys' take on this. Is another something that I think needs to go away. What do you think of this, guys? So Ford announced their dividend for 2022. They got
to kill that.
They resumed their dividend. I see that.
You see this? And now they're saying they're going to do a dividend of 10 cents per share. So guys, that has to go away. Are they raising it
or is it the same? Hold on. Are they raising it or is it the same?
They'd halted it for a while.
Right, but still.
Yeah. I'm seeing 400 million a quarter, which is 1.6 billion a year.
That's half of their net. So you're talking about
that's
now
on
they go from
Bloomberg.
3 billion roughly
To
in
1
net
point.
to 4.2. I don't know, something like that.
Okay, so then how much of the stock right now is because of that dividend? How much of the pump that you're seeing in the stock is because of the dividend? Now they're paying a dividend. They're paying dealers. They have to ramp up the EVs. They have a ton of debt. The profit margins aren't what Tesla is. I just like, where's the good news? Where is the news that you go, yeah, this is a great stock to invest in?
They've been ramping up very efficiently, though. You know, like the Mach-E, to give them full credit, they've been doing it in a way that I didn't think they were going to be able to scale up that well, especially that efficiently. You know, if you look at Sandy Monroe's breakdown of the vehicle, it honestly seems like it was a damn good vehicle. So I'm very impressed with it, but that's the big problem. It's they have the dividend, they have the low PE and price of sales. It seems almost like an attractive, well-known stock, but it's got this like massive, like Achilles heel. I mean, they know it. The people that are working it for, the executives, that team, there's no way they don't look at their stock, look at their company, their net income, and they're not like, we're screwed, guys. You know, and I think they're just trying to pull people into they're going to have an aggressive capital raise to try to set up the next decade of survival. I'm not even going to say growth.
Oh, so you think that they're going to wait for the stock to pump and then dilute?
I don't see any other way out for them.
He's saying there could be some dilution coming up. And if that happens, I don't know. I feel like their stock will get pummeled anyway. So might as well cut the dividend. Forget about those people. Just like AT&T said, forget about those people. We have to, and then it got repriced. And now it's back on the upside. I don't know if you've been paying attention, but AT&T is back on the upside because all the people who wanted to sell have sold. And now the people who are like, hey, I do want you not to pay as high of a dividend. And I do want the spinoff Warner Media. They want that shares just like me. Why did I keep it? I was like, well, the dividend is still there, even if it's 4%. Plus I get shares of Warner Media. So I'm not 65 years old yet. I'm like, I don't need to rush out of the stock.
It was Batali's birthday yesterday. So he's a little sensitive.
So
you know, it was Batali's birthday yesterday.
But my point is that it's the same thing. They have to pull the Band-Aid. They have to just say, you're not getting a dividend. That gives them an extra $1.5 billion or whatever it gives them. That can pay off their debt a little bit faster, or even just go to, like you're saying, they need the 40 billion over 5 years to ramp up this facility. I mean, it's like a no-brainer to do this. It's weird that they keep pushing this dividend.
The amount of money that they need to invest moving forward, it needs to go back in the company. But if they got all that debt, where's that money going to come to pay the debt?
At 13 PE and them switching over to EVs and Mach-E is a successful thing, it seems like. It makes sense, except then CNBC is not telling you that they have 215 billion in debt that they're going to pay off on 72 years. That's the problem.
Jim Cramer, he's so aggressive about the stock. He's like, biggest, like holding in my charitable trust. Like, I love the stock. It's going to $1 million. It's just, he's so bullish on it. And he reaches so many people that I just think it's this massive trap. I don't understand the dividend. And to me, I see it as like almost this murky thing where they're trying to drive people in to just raise capital. I don't see any other way. They're just, right now, the dividend is a bad thing for them.
The only reason you were there for the last decade, before this EV transition is happening, you were literally there for the dividend. Let's face it. And back when it was $7, I wish I took a closer look at it and said, you know what, this is the upside is better than the downside. But now at $25, I don't know where the upside is. Besides, well, let's say to 35 possible, but that's just like, I'm gambling. I don't want to gamble.
If I'm taking like this curve here and I happen to be in the right-hand lane, I would normally, whoops.
Yeah, so this is a bit of a sharp curve. This one and the next one, it's going to keep you safe. It's going to ask you to put your hands back on the steering wheel. And I'm glad that you noticed that. That's an indication that our immersive cluster with all of its animations is catching your eye. So now that we're through the curve, it's going to offer hands-free back.
What?
Play that again with this PR guy is saying.
So this is the guy from Ford. By the way, guys, I don't know if you can see this, but this is the sharp curve he was talking about. And as a side note, there is a Tesla owner who knew that road and went back on that road and the same thing and hands-free, by the way, and it did it no problem.
If I'm taking like this curve here and I happen to be in the right-hand lane, normally, whoops.
Yeah, so this is a bit of a sharp curve. This one and the next one, to keep you safe, it's going to ask you to put your hands back on the steering wheel. And I'm glad that you noticed that. That's an indication that our immersive cluster with all of its animations is catching your eye. So now that we're through the curve, it's going to offer hands-free back to you.
And so now, after that, this was his conclusion.
You know, I got a pension plan that I need to be funded, fully funded. All in all, it was okay, but I guess I've been a little bit spoiled by watching what Tesla's been doing with the full self-driving beta. That is really impressive. And I'm going to suggest that somehow, if you can, get your hands on that and try it out. It'll help you understand what I was talking about. as far as improvements are concerned.
I mean, he's like, if you haven't heard of this company, Tesla.
Yeah, do your best to try to find one somewhere.
Right.
But Ford guy. I wish the camera turned over.
Me too. I was like, oh, why didn't they have
really
me? But that's telling that he's got a Ford pension and he's still saying, you guys should really take a look at what Tesla's doing because they'll inform you. It makes me believe that Ford is looking at full self-driving as an extension of cruise control, but it's not an extension of cruise control. It's way more than just controlling the speed of the vehicle.
Mobileye is a big company doing this stuff too. They're going to be IPOing next year, which we should cover on a different podcast. Everyone might get this other brand that works and does autopilot type things just as well. It's just that Ford is not a software company. Is this a big surprise to anybody?
This is Sandy Monroe looking under the hood of the Ford Mach-E for the first time.
Here, and we're going to remove the frunk. Let's pull this thing out. What just happened? Okay, so we dramatized that a little bit, but it was something that almost happened when I first saw the underneath the frunk. Over here we have the inverter. Down here we've got the motor and the gearbox. Over here we've got the compressor. This is the DC-DC converter. Down here we've got the onboard charger. And then we have 4 pumps. Pump 1, Pump 2, Pump 3, and Pump 4. The last thing I want you to see is down here, you can see that there's a 4-way valve. Now, connecting all this stuff together is this myriad of hoses.
Many of the components for the Tesla Model Y are very close together. What Ben is going to do is he's going to bring the corresponding pieces and parts that we found on the Mach-E, put them on the table, and then compare and contrast the hoses and lines that run between them. We can see that Tesla focused heavily on getting everything as close together as possible. Because this is a heat pump system, the lines run in an exact straight line.
A whole bunch of lines when compared to what the Tesla Model Y had. There's actually 35 different hoses here, which is a very large number.
What happens as Tesla's economy of scale kicks in and they're able to get more power out of a smaller battery with less weight, getting more range, and it becomes impossible for these companies to achieve the performance and or the range of the comparably priced Tesla.
And I think one of the points made in Ford's favor a lot of the time is that they haven't had as long as Tesla, to be working on these vehicles. So maybe the heat pump or the thermal management system will get better over time, but simply Tesla has a massive lead and it doesn't seem like they're slowing down at all. So maybe Ford could have done it 10 years ago and been the Tesla, but simply they didn't have that head start.
They didn't have a head start. You're right. Only a 100-year-old company.
Yeah, well, specifically for electric vehicles.
How do you think it must feel to be GM, knowing that the only reason Elon Musk created Tesla is because they scrapped the EV1 project? He wanted to go work for GM, but then he found out that they were canceling their EV division, so he started Tesla.
Back in the early 90s, GM actually built a real EV car that everybody loved when they did sell a bunch, and then they took them all and scrapped them.
There's a really great documentary called Who Killed the Electric Car? Fast forward 15 years and Tesla will put GM out of business. So they did have first mover advantage and the people did love those cars.
I think Tesla actually tried to license their technology at first. They approached several auto manufacturers and companies. They said, hey, we have this technology. We think it's the future. Would you like to basically buy us out? And they're like, nah.
Toyota did invest in Tesla back in the day, back in the beginning. And then they pulled out of the tech part of it. I think they still kept the shares and they made a bunch of money on the shares, but they pulled back from the tech. So we're talking about all these manufacturers had decades and decades of time. And I don't want to give any leeway to Ford at this point because I think it's ridiculous. You had 100 years to change your ways. In fact, the first car was an EV. The very first car, they put batteries in it and that's the way it worked. It's just that the oil tycoons made oil so attractive that everybody started to switch to the ICE engine. That's it. It was just, it was a money thing, but now it's going to be a money thing in 2020s. It's the other way now. And now it's cheaper to plug in your car at home, charge it and drive an EV. And
so this is an article that I saw in December. I actually invested in NIO after this news. Apple could partner with Chinese automaker NIO, or XPeng analyst says. Apple is poised to enter the electric vehicle markets, and Wedbush Securities analyst Dan Ives predicted that the iPhone maker will announce an electric vehicle strategic partnership, potentially with Tesla, Volkswagen, or other auto manufacturers in China, such as NIO and XPeng, that lays the groundwork to enter the burgeoning EV space. What do you guys think of Apple coming into the space? Are they someone that could actually take on Tesla? Financially, they can. But can they catch them in terms of technology?
I think the way that people are looking at the Apple going into the car business is the right idea of them mostly either acquiring or heavily investing into a whole separate company, because I think they'll have really a hard time spinning out a whole separate division. But at the end of the day, Apple is incredibly profitable. even if most of the revenue is from iPhone sales, they have so much profit that I can very much see them invest with their massive balance sheet into an existing automaker and make a real dent. Not just through the Apple car that they manufacture in-house, but by actually investing into a whole separate company.
You know what? I don't know if they're going to partner with the Chinese because you can't have over 50% of ownership. I don't know if Apple wants that, meaning like they own the iPhone brands. They do have Foxconn manufacturing it. Let's say they get XPeng to manufacture it. They're just going to own the brand. Maybe that'll happen. That's possible that XPeng makes the car and they just buy the car to Apple specs. Very possible. Yeah. But I would think, people have said this, but I would think that they would just buy someone who's going to fail. Like, let's say Lucid has a bad year next year. Why wouldn't they just buy them for like 1/10 of the price? If Lucid can't produce enough vehicles, say, yeah, let's take their technology and put our Apple sticker on it. But once again, Apple does not own the iPhone like production. So XPeng or NIO makes sense for the production part. But NIO doesn't even produce their own cars. They're partnered with JAP. I forgot what that stands for, but they're partnered with them, a Chinese government-owned manufacturing facility. So these are all like weird geopolitical things that I don't know if Apple wants to be involved in that, but maybe they do. I have no idea.
Would it be an Apple branded car that they design and have someone make? Or would it be like they take one of NIO or XPeng's platforms, right? The EV platform, and lay their software on top of it? Like, what do you think the actual car would look like?
My idea is that Apple would probably try to change the look, at least, even if they didn't manufacture it in-house, they would have some kind of look difference, because Steve Jobs, for example, really instilled into the company like the customer experience, at least from a product standpoint. Steve Jobs, for example, really instilled into Apple the need for luxury, from the way that the box opens up to how the iPhone is presented. So I think even if they don't manufacture the car in-house, if they just have the software, for example, like they have self-driving features or just the software inside the car, I think that at the end of the day, they will want to differentiate it and make the car feel or look more luxurious. So whether they manufacture it or not, I think to some degree they will have it in-house.
I tend to agree with you. The one thing that you know about Apple is that they're never first in any of the spaces that they dominate. But when they come in, it's the right product and it usually kills everyone else in the space. There is room for a number two, right? And right now we're saying all the other legacy automakers will be a small piece, but I would just give Apple at least right now the benefit of the doubt because they have crushed in every industry that they've entered.
I want to show what I think the Apple car will be.
Oh, sign me. I'm pre-ordering that right now.
There are designs out there floating on the internet. So I thought that was just funny. I still prefer this one.
I want the quad motor of that one.
Oh, yeah.
Click like and subscribe, hit the bell, and check out the Discord. We're going to have discussions about EVs and more. And Absolutely. Quentin, why don't you tell us about your site?
I mostly focus on EVs. I'm a big fan of Tesla. That's by far my biggest holding. So a lot of my content will be structured around Tesla, but sometimes I can spin off from there, like a Ford or a Lordstown Motors.
If you like this content, please like and subscribe and hit the bell to be notified, and continue the conversation with us on our Discord, and consider becoming a Patreon. We have multiple tiers for supporter, fan, and super fan.
Please hit the Discord up because we want to talk with Q. And if you have questions for him, leave them there because he's going to answer them.